Laura Anthony, founding partner of Legal and Compliance, a full-service corporate securities and business transactions law firm. Today is the continuation in a LawCast series talking about the NASDAQ listing requirements. In the prior LawCast in this series, I gave a brief summary of the corporate governance standards, including the requirement that the majority of the board of directors of a NASDAQ company be independent, and that all of the audit and compensation committee members be independent. Under NASDAQ rules, an independent director means a person that is not an executive officer or employee of the company and does not have a relationship with the company which, in the opinion of the board of directors, could interfere with the exercise of independent judgment in carrying out the responsibilities of a director. NASDAQ provides a list of people that would definitely not qualify as independent, including the following: a director who has been employed by the company at any time during the prior 3 years. A director who has, or has a family member who has, accepted any compensation from the company in excess of $100,000 during any period of 12 consecutive months within the prior 3 years other than compensation for serving as a director, compensation to a family member who is an employee but not an executive officer, or funds received under certain qualified retirement plans. A director who is a family member of an individual who was employed as an executive officer of the NASDAQ company at any time during the past 3 years will not qualify as independent. Continuing, a director who is or has a family member who is a partner, controlling shareholder, or executive officer of any entity that either gave or received payment for property or services of either $200,000 or 5% or more of the company's gross revenues, whichever is greater, during any of the most recent prior 3 years. Excluded from this disqualification category would be payments made solely for investments in the NASDAQ company's securities or payments under a non-discretionary charitable matching program. Next, not qualifying as independent would be a director who is or has a family member that is employed as an executive officer of another company where a director of the NASDAQ company serves or served on the compensation committee within the last 3 years, and a director who is or has a family member who is a current partner of the company's outside auditor, or was a partner or employee of an outside auditor who worked on the NASDAQ company's audit at any time during the past 3 years. I'm securities attorney Laura Anthony, founding partner of Legal and Compliance and producer of LawCast. Should you have any questions about today's topic, please visit securitieslawblog.com and lawcast.com or contact me directly. Inquiries of a technical nature are always encouraged.